Hello and welcome to BQ Prime. A very good morning to all the viewers. I'm Hiral Dadia. You are watching Stocks in Focus and a special focus on the real estate space in today's session. And clearly, if you see from a market's perspective as well, the conversation is going to be about the sustained rebound that we have been seeing in the retail industry. There is strong revenue and consumption growth that we've seen in the first quarter of FY24 that was led by retail development as well, and a lot of beneficiaries that came in on the back of their same, like Brigade Enterprises, Phoenix Mills, Nexus Select Trust, DLF Cybercity Developers, et al. Now, how would the industry pan out? We will be speaking to one of the analysts who tracks the real estate space pretty closely. Joining us is Adhidev Chattopadhyay, analyst at ICICI Securities. And post that, we will be joined by the management of Brigade Enterprises to decode further. Adhidev, good morning and welcome to the show.
Yeah, good morning, Hiral. Yeah, glad to be on the show today.
Always a pleasure to speak to you. Adhidev, overall, we've been looking at the retail activity in the first half of 2023, and an interesting report by JLL which has clearly indicated that we've seen strong revenue and consumption growth in the first quarter, and the gross leasing is at around 3.16 million square feet. Top categories have been fashion and apparel, F&B, multiplexes, et al. How are you looking at the retail space in terms of real estate?
Yeah, so it's a pretty interesting space that there are not that many players. So if you see, there are just around 100 grade A malls, you could say, across the country, right? And a lot of the earlier poorly performing malls shut down over the previous decade. So whatever the players we have, the 5, 6 large players in the market in terms of mall development, I think the grade A malls in select cities in select micro markets continue to do well. Whereas, as you said, rightly said, Q1 was a good quarter for everyone. We've also seen multiplexes coming back in a strong way, I think, for the second quarter, which should only help the overall consumption spread going ahead. And with malls having emerged more as lifestyle and entertainment destinations as opposed to just convenience shopping. So I think the overall longer term trajectory, the story does look good, and discretionary consumption seems to be holding up well across categories.
Right. So how are you seeing the retail activity if you have to divide it between various zones? Where is the highest stock available right now if you have to look at the key metro areas?
Yeah, so broadly, obviously, the top 6 or 7 cities tend to garner the highest what do you say density or cluster of the malls. But if I take the top 15 or 20 cities of the country, right? I'm taking example of an Indore, Ahmedabad, so on those cities, right, or Lucknow, which may not be on the radar of everyone. Even these cities are seeing a pretty decent consumption, and even these cities have capacity to at least have 2 or 3 large malls, right, which can service various catchment areas in these cities. So, example of Phoenix, which opened its mall in Lucknow just over a couple of years back. Now they've opened in Indore, and they also now the Pune one has opened on the other side of the city, right? The existing mall was in the eastern side of the city near the airport, but now the new one is at Wakad in Pune. So even in the same city, we are seeing, depending on if it's a new catchment area, there is still a lot of demand there, and it is also driven by the urbanization in those areas, right? Certain micro markets, a lot of residential units have come up across where the office areas are. So the catchment area helps them to attract enough consumption, at least on the Fridays and weekends, especially, if not so much on weekdays.
Right. And overall, if you see uh, from a clear inventory perspective, uh, do you see good amount of vacancy right now, or do you think majority of it is already leased?
Okay. So what we have seen, at least, obviously, you had a couple of years, right, impacted because of COVID, right? In fact, we saw mainly, I think, smaller entrepreneurship-driven franchises, right, them shutting down. But with the rebound, right, which you have seen last year, even that has come back. And the larger, more established retailers, right, in whatever segment, QSR, apparel, even a multiplex, right, they continue to do well. And if you look at the store expansion plans of retailers, they are pretty much on track over there. So that is the thing. And if you look at the there's a gap obviously between the traded occupancy and leased occupancy, what they say, right? So most of the top performing malls in the country, if we talk about, right, I think they would be at more than 95% occupancy in terms of the leasing. Obviously, some churn keeps on happening in the tenants on an ongoing basis, but that is only to be expected as retailers try to bring in better tenants who pay higher rentals, right? And even if they replace the existing tenants, there may be some gap in the temporary gap in the occupancy, but it was more than made up with higher rentals over the longer term. So a good example are the two Apple stores which would have opened across country, right? Bombay, Delhi. So you've seen the launch of the new iPhone, the sort of rush over there. So that all of this feeds into consumption, right? And subsequently into the rental income of the
Right.
mall operators in those
Right.
geographies.
So, Aditi, I was reading this other report as well, which was clearly indicating that the shopping mall stock in the first half of FY23 was at around 89 million square feet. The
Sure.
pipeline for the second half, or the expected supply pipeline of retail development, is at around 38 million square feet.
Right.
And from the second half of 2023 to 27, the shopping mall stock is expected to touch 127 million square feet. Now,
Right.
taking these numbers into consideration, is this the average growth that you would have seen, or is this exponential and strong growth that we are seeing in terms of the addition?
Yeah, so if you look at, especially in the mall space across India, the historical net mall space opening, obviously we strip out poorly performing malls, which may have also shut down in this.
Hmm.
Average has been anywhere between 7 to 10 million square feet a year in terms of the new mall supply which is coming to the market. So, as you said, the pipeline is good for the next 4 to 5 years. See, obviously, a lot of malls which are people are starting construction today would take 3 to 4 years to come up. So from 4 to 5 year pipeline, I think an average of 8 to 9 million square feet a year, right, is a pretty decent number to work with. And the fact is, see, it is just more or less the established players, right, in the market who are building more malls. If you like a Phoenix Mills, you look at DLF, these sort of players, right, they are the ones bringing the supply. Even an Oberoi new mall in Borivali, which they would have opened. So it's the incumbent players themselves who are building these malls. And good thing there is not a whole lot of players who are jumping into this. It is just the ones 8 or 10 players now who have actually been able to have seen at least cycle of the last 10 or 15 years who are now building the new malls, and they carry forward a lot of learnings from the past as well in terms of what works and what doesn't work, and with continuous conversations with the retailers, right, and with customers in terms of what works, what doesn't work. So all this feeds into the quality of supply which is coming up incrementally.
Right. In terms of new themes to explore in this space, one of the options that people are looking at is the premium outlet centers. Now, this is mainly offering premium brands at discounted prices, which is absolutely popular in the US as well as the Europe in regions. India has started with athleisure as well as apparel brands. How do you see this trend panning out specifically from an Indian market perspective, and who could be the key beneficiaries out of this?
Yeah. So as I said, right, even in the malls, right, now what is happening is, as I said, the mall operators are trying to selectively bring in these brands, right, and see what is the response to such things. And as I said, these retailers would typically pay higher rentals than incumbent retailers. So uh, while right now the spaces, what we understand, may not be very large in terms of store sizes, right? Uh, there will be much smaller sizes right now. But if the thing picks up well, right, and there's enough confidence on both from both the retailer and the mall operator that even larger store formats would work, right, for these brands, I think we could see more and more of these international brands coming to India, right, which are still not there. I would say many brands that you see in malls abroad, that still that room is there to add a lot more brands going ahead. But it is an ongoing thing. It is not something which
Hmm.
happens overnight, right? So I said the Apple large format store is one
Hmm.
of the, I would say, first experiments, right? You obviously had other resellers, but a flagship store is something new in India.
Right.
So far, it seems to be doing well. Yeah.
Right. And Adidev, how about highway retailing? Because current highway length, say 1.5 lakhs kilometers, expected to reach 1.8 lakh kilometers by 2025. There's increased passenger traffic, low rentals, visibility is high as well. How is this category emerging according to you?
So we do not have a specific view because there's limited data or things to go in this segment. But I would say it feeds into each other because it's a mishmash of hotels, right? You have hotels along the highway stretches. You may have some other commercial complexes which also have got a high street retail component, right? As a part of overall project. So I would say Big Bang, what do you say, retail spaces on a standalone basis, right? Maybe still some way away, but as part of a mixed use development, right? Even on along a highway sort of thing, it works well. But what we think is that this obviously it would grow, but to get to a certain large enough size, it is still a few years away.
Right. So, taking this gamut into consideration, what would your topics be specifically? No, because we've not really covered real estate as a space. We've spoken about more of retailing with the real estate players. What stocks would you bet big on?
Yeah, so if you are playing a theme like a retail, right, it is not that everyone has got an
Hmm.
exposure in this space, as you understand. It being a capital intensive business, and of course, it's now a specialized business, right, where a lot of things depends on your relationship with the existing retailers, right. So obviously, the names which come to mind, obviously, largest small operators, obviously Phoenix Mills is there, and obviously you have Nexus Select Trust, the recent listing, right. While Phoenix is obviously going the development way where they're building new malls, Nexus Electrust will look to acquire other malls, right, to grow their portfolio over a longer period of time, apart from the existing assets they have. And apart from that, as I said, we have selectively a DLF, maybe the mall in Gurgaon, which they are planning, Mall of India, or as that Oberoi, the Borivali Mall, which would open up, or other players like Prestige and even a Brigade, like they selectively look at adding space over there. Apart from that, maybe three to four other private developers as well. So it's not a whole lot of players in the market, as I had explained, right? But the 7, 8 players who are there, I think the sort of quality of supply we are seeing is pretty decent. And again, as I said, it very much is location specific and depends on the relationships which the developer has with the retailers and how well they can manage these relationships, which has, as I said, been built up over the last couple of decades. A lot of what do you say experience goes into now building up new model.
Absolutely. And I think this is a space one should be watching out for as well. Thank you, Adhidev, so much for joining us on the show and sharing the views. But one such company that could be a beneficiary is a Brigade Enterprises. Joining us on the show is Nirupa Shankar, Joint MD at Brigade. Nirupa, good morning and welcome to the show.
Morning, Kiral. How are you?
I am good. A long time that we are speaking as well. But
Yeah.
clearly, from where we left it and from where we're picking up, the retail rebound that has come in, specifically from a real estate perspective, not residential, not commercial. What's your view? Because retail development is becoming one of the key development areas from a leisure perspective as well.
Yes, I mean, it's been a really good and pleasantly surprising rebound post-COVID. I think retail and hospitality were two of the worst hit segments, but it's really nice to see how quickly consumers decided to come back to the malls. We've been pleasantly surprised on all parameters, whether it's the footfalls back into the malls, whether it's the kind of sales density and the sales volume that people are spending within the malls. All parameters for retail have been much better than what they were pre-COVID. So very good signs. We're also seeing interesting trends of retailers actually taking up larger spaces in the malls. Frankly, I thought that post-COVID, people would want to conserve on their rental outflow and probably take smaller stores. But we were pleasantly surprised when people or retailers decided that they want larger stores, more experiential stores. So from that perspective, it's nice to see the resilience of malls in this country.
Right. So overall, if you have to see the revenue mix for Brigade as well, you still have a little over 50% that comes in from real estate. Lease rentals and hospitality form the remaining. Do you see that mix changing from here on as well, taking into consideration the demand that you're picking up with regards to lease as well as hospitality?
Yeah, we expect the ratios to stay around the same
Hmm.
because the real estate or residential side of the business is fairly cyclical. Sometimes it can account to either 50 or 60% of our total top line and a variation between those numbers. But the lease rental income that we have and the hospitality income, which we call as our annuity income, this we expect to stay in a similar ratio of around 40 to 45 to max 50%. We believe that this is a healthy mix because having annuity income sort of balances out the cyclical nature of what could happen in the residential market. And in times like COVID, when there was annuity income portfolio was a bit disrupted, that time the residential business sort of supported the overall revenues for the company. So we expect to continue this trend. We are fairly bullish on building more offices, building more malls, and building more hotels. We are fairly bullish because the rebound has been good, and I think the market fundamentals are also good.
Right. And overall, how do you see vacancy polarization playing out? Because clearly you've seen that the superior malls are recording a higher footfall. They do have lower vacancies. The contributing parameters have been the infrastructure, the amenities, as well as the good tenant mix is also absolutely important, right? So, if you
Yeah.
have to look at Brigade as a whole, what is the overall experience from a vacancy polarization perspective?
So you're absolutely right. I mean, I think the larger lifestyle malls tend to do better because they create a destination in themselves. And typically you have one large lifestyle or destination mall. When I say large, it could be anything above 800,000 square feet or 750,000 square feet. These tend to become destinations in themselves. So people from the entire catchment congregate at these malls, and the footfalls are good. And because of the kind of space that you have, you're able to give a complete range of mix of tenants. You're able to zone the mall a lot better. So from that perspective, performance is a lot better. You're able to include a lot of food and beverage and entertainment and other aspects that drive people to a mall. However, in each large city, there are only so many large destination malls that you can have. So I think India will start moving towards neighborhood malls because you will need retail and organized retail spaces in smaller catchments. At Brigade, what we typically like to do is that we like to create retail areas which we consider social infrastructure for the city and for the residents of the city. So we try to include it in our large mixed-use developments. So projects where we have 40-acre townships or 100-acre townships, we try to include about around 2 lakh square feet of retail area. It could range between a lakh and a half to 2.5 lakhs. But we like to include that in our mixed use developments because it adds a lot of social infrastructure for certain micro markets. And people need food and beverage, they need apparel, they want entertainment, they need basic services like salon, gym, entertainment. So we try to add all these elements into the neighborhood malls as well.
Right. Nirupa, another question I have is the new themes that we're picking up, which a lot of real estate companies that are exploring for the retail space is the premium outlet centers, right, which are offering premium brands at discounted prices, which are absolutely popular in the US as well as the Europe.
Yeah.
India has started with athleisure as well as apparel brands. How is that trend panning out in India, number one? And is it something, as as you mentioned, that it's more in terms of tier two, tier three metro outskirts, or is it a phenomena that you're seeing in the metros as well?
Largely a phenomenon in the metro cities because what you're seeing is these outlets come out in newer micro markets which are not yet ready for a full-fledged mall. So brands are looking to experiment and gain more market share by creating outlet brands and up and coming micro markets, like I said, maybe there isn't an existing mall there. Maybe it doesn't have scope for a full-fledged lifestyle destination mall. So they're experimenting by getting market share in these areas. From my discussions with various retailers, what I've learned is that the kind of sales that they have in tier two and tier three markets and the kind of products that are chosen there are fairly different from what is selected in the tier one markets. So they have a different selection of products for tier two and tier three and different selection because even the price points could vary. So brands are experimenting at different price points for tier two and tier three. But in terms, what we have noticed for tier one is that like you said, you have certain stores and certain products in the large lifestyle destination malls. This can change with the kind of products in the neighborhood malls, and this will also change with the value outlets that we see on the outskirts of the city.
Right. And your views with regards to highway retailing?
I mean, I think it is fairly still new and nascent in this country, but it can only develop from here. We would love to see more developments on the highways because that enhances traffic between locations. And the moment the highways are in place, I think development along the highways is but natural. You will not only see retailing coming up, you'll see a lot of food and beverage, you'll see hotels, and perhaps even office. So for us, I think creation of highways is the first step to enhancing any sort of real estate along the way.
Right. Nirupa, my last question on an overall business perspective, your outlook with regards to FY24, because the first quarter we did see some bit of a dip that did come in from a top line and a profitability perspective. Margins the company has been able to maintain, but what's the trajectory that you're looking at if you have to consider all the segments and the landscape that we are in at the moment?
We are actually very bullish on the second half of this fiscal year. The first half has been quite good for office and retail and hotels. But the second half of the year is where, all the festivals come in. So it's the marriage season, so hotels do well. It's festival season, so the malls do well. You'll have your end of season sale in the fourth quarter of this fiscal year. So that's when a bulk of the sales happen. Generally, Q2 of each fiscal year, Q1 and Q2 is sort of a little lukewarm when it comes to retail, but we are expecting to have a bullish second quarter,
Right. So
second half.
second half, absolutely, which will then add up to a good FY24 as well. Thank you, Nirupa, so much for joining us on the show and sharing those views. But that's a discussion in terms of how the retail landscape is panning out and an overall last conversation with regards to what the anticipation for FY24 could be. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to Beaky Prime. As well, I've not spoken to him since